nameless in a sea of the dying and shameless.
Just this morning, it came out that for all these sanctions, and I've got a commentary you'll see in the next day or so on this subject, for all of these sanctions against Russia, they just recorded for the first quarter a blowout record current account surplus for the first quarter of this year. It's because for all of the bluster, for all of the geopolitical maneuvering and so forth, but when you look at what Russia has right now, a lot of Europe can't do without it. I mean, Germany's finance minister had to admit several days ago that, well, we have no choice but, especially if we can resolve Ukraine, to contemplate acceding to Russia's demands down the road, that they want their currency recognized. So commodity currencies, I think, is a big theme going forward, Rob, whether it's for Russia, whether it's for Canada, or whoever it's for, whether it's for...
Hi, everybody. This is Rob Keynes with goldsilverpros.com. We're recording this on April 11th, 2022. I have a returning guest to the program. It is Chris Temple, who's the editor and publisher of the National Investor, here to speak about his views on the market. And we'll be joining him as well on May 6th and 7th at Strategic Investment Insights in Chicago in 2022. Really interesting conference, the first time speaking there for me. Chris, tell us a little bit about the history of this conference.
Well, sure. Thanks for having me, Rob, and I'm going to look forward to seeing you there again. The Chicago Resource Expo started way back in 1977. A dear friend, 𝙂𝙊𝙇𝘿, was a retail broker and thought that resource stocks, generally speaking, were kind of underserved. They didn't get a lot of specific attention even back in those days. So he started this conference. It's still next to the Blanchard and now Brian London run New Orleans Investment Conference. It's the longest running conference in the country that had always focused primarily, at least, on precious metals and resources generally. But he and his son Eric and I sat down last fall in anticipation of getting in-person conferences revived again. And we basically came to the conclusion that we have to have a much broader menu of subjects that appeals to a broader menu of investors. And even more so because there's a world evolving, Rob, that none of us has experienced. None of us is familiar with a world where the entire world economy did not revolve around the United States of America. None of us has lived in a world where the US dollar was not the global reserve currency. Now, stress global. The US dollar is not going away anytime soon. It's going to be around for our grandchildren to use. But what is beginning to change, and we've seen this in the news recently, is that the US dollar will be king of the hill regionally. It won't ever be dethroned in the Western Hemisphere, but there are already things afoot that are going to change that in the rest of the world. So we need to get our heads around what this retreat from globalization means, which was already underway for the last several years. The Ukraine war has dramatically accelerated a lot of these moves. The US dollar still has roughly 60% recognition in the total of global reserves. By the time, my children are my age, it'll probably be down to 40%, still probably the single largest one. But again, in a multipolar world, that has implications for what resources will cost. It has implications for the cost of living for the average American when we cannot compel the entire world anymore to use dollars. So we've got all of those things. The two biggest things that kept consumer inflation down for our adult lifetimes are going in the wrong direction, those being labor and energy costs. We're at the beginning of a new energy crisis. Labor costs, which were kept down by third world labor for a long time, that's not going to happen anymore because a lot of people in other countries want higher living standards. And we cannot any longer, as the West, whether we're speaking specifically the US or elsewhere, go into these other countries that are developing, take resources for pennies on a dollar to keep our own costs down. That's over with. Politically, they won't stand for it anymore. So a lot of things have changed that are going to upend the formulas that we all used and the assumptions we all had for economics and investment markets alike. And we need to get our heads around them and do them quickly. So that's why we rebranded the conferences we've done. much broader menu of subjects, companies. I mean, medical technology, biotech, environmental remediation, conventional energy, green energy, precious metals. We're going to cover it all.
Yes, let's talk a little bit about that conference. Great, macroeconomic conversation that we're going to have here. I'm going to share the conference page. Anybody that's interested in coming, I'll be speaking here, and Chris will be here as well. It's strategicinvestmentinsights.com. It's May 6th and 7th at the Lincolnshire Marriott Resort in Illinois, Lincolnshire, Illinois. And like you said, we'll be talking about a lot of things. We'll be on this panel talking about macroeconomy on Friday, but there are going to be a lot of other things going on here with respect to the new economy and what's going on. So you mentioned green energy, macro energy, innovation, and what's going on with the currency situation as well. I kind of want to start off with the currency situation in Russia for a moment first. It looks as though what Russia is doing is wants to sell its resources in rubles to boost the quality of the ruble and the strength of the ruble in relation to other currencies, especially the dollar. And it also has pegged its ruble to gold. And both of these things people think is going to increase the demand for rubles, but also reprice gold in US dollar terms as that ruble USD finds a new equilibrium price, that currency pair finds a new price. Is this your thoughts on that, Chris, or what are your thoughts on recent events?
My view, Rob, is that the gold ingredient, where rubles are concerned and Russia's reserves are concerned, is relevant. More so relevant is the fact that Russia has vast reserves of oil and gas, of nickel, of palladium, of a lot of agricultural goods. And to me, that's the important story. Gold is the icing on the cake. And that's a subject we're going to talk about in Chicago, how this does and does not impact the gold price going forward. As far as the gold price going forward, I think for Americans, yes, gold is going to rise over time in US dollars because the US is going to be less able to command a premium for its currency and its paper in this evolving multipolar world that we're going to have. So you're looking at countries, and it just came out this morning. And again, you mentioned we're recording this on Monday, April 11th. Just this morning, it came out that for all these sanctions, and I've got a commentary you'll see in the next day or so on this subject, for all of these sanctions against Russia, they just recorded for the first quarter a blowout record current account surplus for the first quarter of this year. It's because for all of the bluster, for all of the geopolitical maneuvering and so forth between NATO, and when you say NATO, you've got to look at the deep state in the U.S. NATO is a pawn. If they had any sense, Europe 30 years ago would have told the U.S., hey, thanks, but the Cold War is over. We don't need you. They can live with Russia in their own backyard. None of this would be happening. But that's another story. But when you look at what Russia has right now, a lot of Europe can't do without it. I mean, Germany's finance minister had to admit several days ago that, well, we have no choice but, especially if we can resolve Ukraine, to contemplate acceding to Russia's demands down the road, that they want their currency recognized. So commodity currencies, I think, is a big theme going forward, Rob, whether it's for Russia, whether it's for Canada, or whoever it's for, whether it's for some of these South American nations, which when the smoke clears from all this geopolitical stuff, are glorious investment opportunities long-term in South America still, some of the up-and-coming countries down there. Those people that have the commodities to back their currencies, not just gold, but everything else, they're going to be king of the hill going forward. And countries like the U.S. are going to have to start paying up. So that's one of many reasons why higher inflation is here to stay.
Yeah, I agree with you on that. I think countries who have large bases of commodities, and you saw it a couple of years ago with Indonesia and Freeport-McMoRan, and basically redoing their agreement with them on that big copper mine because they realized, hey, we're not getting as much value out of this as Freeport-McMoRan is. And what had been the model, I think, in a very simplified version, had been these countries that have these commodities weren't making that much on their investments, but the nations that had their companies going in globally perspective, they were adding complexity to the system. They were, doing finished products and things and selling those on the market, and they were making more of the money. And now a lot of countries, including Russia, are saying, wait, we've got these vast amounts of resources. We don't necessarily want these Western conglomerates and Western countries to pay us marginally for these commodities, and in a U.S. denominated currency, which gives them negotiating power from a currency perspective, but creating all these finished products, making all this money. I mean, if you look at the right end of the supply chain, Apple's making a ton of money on its iPhone products that uses 31 critical minerals to develop that product, including silver, but also things base metals, tin, and things like that. So I think what's happening is a shift from these countries with large commodity bases saying it's time for us, it's time for the world to value us through our currencies for what resources we have.
Well, Rob, for years, I've had two signature essays. One is called Understanding the Game, where I teach people about the Fed and its inner workings, how fractional reserve banking works, how it's impacted the markets and so forth. The second I called The New Imperialism. And it kind of speaks to what you just said. Centuries ago, the big empires of Europe, and before that, China, when it had an empire many centuries before Europe ascended, and whoever else you want to look at in history, what did they do? They sent their ships and conquering armies to the fourth, wherever they could get to, and they would find tribes people, the non-European, non-Chinese, and they would come in and impress them into servitude. Sometimes some would stay there, some would go back to the conqueror's homelands as slaves. The resources would be taken, and the locals didn't get a whole heck of a lot out of the deal. Now, in recent years, we're told that we've cured those problems of imperialism and so forth. But what changed? Instead of ships and conquering armies, the powerful nations would send to these developing lands trade ministers and lawyers and bankers and economists who would sweet talk them into a regimen where the outcome wasn't a whole heck of a lot different, where they get pennies on the dollar and crumbs, sometimes leave in their wake environmental degradation and the rest. And for a whole host of reasons, that's over with. It's one of the reasons why going forward, the base level for inflation and rising costs is going to be considerably more than most people understand, least of all, of course, the Fed, that somehow thinks that by next year they're going to get inflation back down to their 2% target, and I believe the pigs can fly too.
Yeah, the whole inflation targeting thing, I think that's over. I mean, we're in high inflation. I think we're going to be here. And I think when you see what's happening, you were mentioning before the reversal of the globalization trend. What the United States had depended on for so long was cheap labor and exporting inflation through the dollar, but getting cheap products back. That's over. And two things I think are happening is the current account balance in the flow of goods is going to change, especially as because China is trying to support their middle class with internal buying. So they don't want to be that take dollar inflation, buy treasury debt, and export cheap products. They want to change and become a much stronger nation. So they're going through that. You see Russia is saying, we're not giving you our resources for free anymore, and we want you to support our currency. So that whole model of the way things have been for so long, especially the last 50 years, has changed. And I think what that means, Chris, is a lot of those dollars we printed, they're sitting in Eurodollar accounts. From a currency perspective, we're going to start flowing back to the US, and that's going to put some additional pressure on the dollar. I do think people are going to hold the dollar for a long time, but why would China need to hold all those what they call Eurodollar accounts? Anything outside the US is Eurodollar. I know it's confusing, but a lot of these countries may not want to hold high balances in Eurodollars. They may want to go to the yuan because China is financing this Belt and Road Initiative in Chinese yuan-based loans. The ruble for Russia and its gas. So I don't think those inflation pressures are going to really ease anytime soon until we figure out what this multipolar currency world looks like. And I think it's also, Chris, going to call into question how strong is the U.S. and can the U.S. support itself? I know we're an energy exporter, but what about our manufacturing? What about our industry? I think there are going to be changes coming to the way the U.S. relies on some of these other countries for industry. And do you think that there'll be opportunities there, Chris, for people starting new industries in the U.S.? Do you think we're going to bring back some of our industrial base and our manufacturing base?
Oh, I certainly do, Rob. And we have no choice. The question is how quickly we do it. We have an administration right now, unfortunately, that has thrown a lot of monkey wrenches in the works. For example, the president invoked the Defense Production Act just several days ago, but yet part of his administration is stopping or slowing down projects that we need to produce these critical minerals that we're going to get less of as time goes on from these other countries. So yeah, there's going to be all kinds of opportunity. Look, in short, Rob, and folks listening, we're going to dust off the Monroe Doctrine going forward. And it's going to be not just in military matters, but it's going to be across the board. We're going to have to come to the conclusion, and this is not going to go well in some of the quarters of power in Washington that do not want to let go of the American empire that has been pieced together since the end of the Second World War. But we're going to have to come to the understanding that going forward, we need to fend for ourselves. You know, Ron Insana, a good economist and commentator, made a comment several days ago, summing up even more simply this future that we have to look forward to and that we have to prepare for our lifetimes. All of the global economy, supply chains, all these things was done purely on cost, simplicity, and, you know, real short-termism stuff. Now we've got to make plans based also on security. And where the U.S. specifically is concerned, we're starting from a horrible, horrible deficit on that. So we better really, instead of worrying about what's going on in Ukraine, we should be worried about China getting a bigger foothold in our hemisphere in South American countries. They should not be there at all. We should be the ones that are enabling these resources to be recovered and done fairly to the benefit of everybody involved. So I mean, we could talk all day long about the easy and criminality of how our foreign policy is run, which is part of what's got us in this mess.
So let's talk, Chris, a little bit about what we'll see at Strategic Investment Insights. And I'm going to share screen again on the webpage for people. Really want people to register for this and come out if they can. It'd be in Chicago, May 6th and May 7th. We're talking about green energy, you know, some other areas of the economy that are going to do well. Talk about some areas that you see doing well, you know, in light of all of these sort of geopolitical and currency system changes that we're seeing.
Well, clearly going forward, and somebody came up with a theme the other day. You've seen it in my newsletter recently. We're going to talk about it at the conference of the new FANGs, so to speak. FAANG, what does it stand for? Fertilizer, agriculture, natural gas. The G stands for gold and precious metals. It's going to be a lot different world. So there are a lot of these areas too, Rob, where we have not yet seen hardly the beginning of some bullish moves we're going to have for a lot of years to come for some of these areas that are still undervalued, mostly in commodities. Another statistic I'd love to give, and actually while we're on this page, you know, there's you, there's me, Emily Hirsch down on the bottom. She's a macro expert on the whole supply chain thing. Ryan Sistad, based up in Minnesota, has been one of the public policy groups leading this whole thing. Lee Warren, longtime old hand at the Chicago Resource Expo, has a lot of really uplifting things to say about you know, people's lives and about how to really, you know, get your head around how to deal spiritually, I think, for lack of a better term, with all of these changes and not be overwhelmed by them, but understand them and use them. So, you know, it's going to be a lot about resources, about green energy, about these macro changes underway as we retreat from globalization and have a multipolar world and all the rest. But even beyond that, you know, we're going to have a couple medical supply companies, biotech, things like that. One of my favorite statistics, Rob, is that on paper, the worst time ever to be an owner of U.S. stocks was in September of 1929, at the peak of the market back then. From that point until April of 1932, which was the final bottom for the market, the Dow Jones Industrial Average, which was pretty much the one and only major index at the time, dropped by 89%. And yet 1 out of 3 publicly traded companies were higher during that time because they did things better than their competitors. You had new discoveries, you had new products, you had things like this. I think the odds will be even better than that this time around. Still not great. I still believe very much we've started at least a cyclical bear market broadly on Wall Street. But there are still a lot of discoveries being made. There's still a lot of improvements to lives that are going on. And what's fun I mean, downright fun about a period of time like this. If you are a traditional fundamental investor, a stock picker, you like to look at things story by story from the bottom up. We're in a point now, Rob, where you need to actually work again.
Yes.
I mean, with the
that.
Fed, with the Fed printing all this money for all of these years, and you got the Fed putting all this stuff, you just close your eyes and you throw a dart at whatever you put it up a chart of all these long ETFs or whatever Cathie Wood owns, you can't lose. Well, now you can, and people are losing. The Cathie Wood stocks are down 60% or something like that already, on their way to 90. So you can't do that anymore. What you have to do is actually become an investor again. You've got to understand, and this is what comes first. You've got to understand the world in which we're going, understand what the Federal Reserve is up to, which I'm here to tell you is going to be a lot more hawkish for just as long as they can possibly get away with it. You've probably seen a cartoon I've used, a game of monetary Jenga where you got Jerome Powell and the other Fed governors are pulling sticks, and don't pull out one too many. It might be late this year. It might be next year. I don't know when it's going to be. But in that kind of an environment, there's still a lot of liquidity. That's not going away next week. And there's still a lot of good stories out there. I mean, look at my heaviest sector exposure in my newsletter for a while has been uranium. And it doesn't seem to make a whole lot of difference what the broad market is doing. That's a ship that is leaving the dock, and a few people bit by bit are starting to find out about it. That's probably still going to be going forward the best energy related sector you can possibly invest in.
Yeah, I think uranium, I've had people on the show predicting $100 uranium, and people thought that was crazy, but we've touched on 60 a couple of times. Yeah. And I think we're early in that stage for uranium. It's something I wrote about on Seeking Alpha probably 10 years ago and said, hey, we're going to have a bull market in uranium. Who knows when it'll happen? And it's been a long time coming. It's really been a market that's just been in supply destruction for a long time. Had Fukushima kind of kicked that off, and people didn't have a positive view of it. We tried to go into all these other things, Chris. We tried to go into solar and wind, and then we realized in Texas when we had the big freeze last February, a year ago, that when you rely on solar and wind too much, during storms, which you may not have reliable inputs, and you don't have enough extra capacity for that, within nuclear and within natural gas and coal, because you've shut it all down. You can see what happens. We all got shut off, and I was stuck in downtown Austin with my daughter, who's an actress, and we were filming on set at the time at our hotel, and we had no food, and you could not get around. I couldn't drive with my truck. The story I always give is we literally walked in like 1.5 foot snow, which in Texas is a lot, especially Austin, trying to find a place that had groceries, so that we basically didn't starve over those 3 to 4 days. So uranium to me is super important. It's the most reliable baseload power that we have. It's relatively inexpensive, even when you compare it with natural gas and coal. We have the technology, which has made it a lot cleaner, and it's more environmentally friendly with the way that we're disposing of it. And Chris, I think we need to get that message out, because I see a huge investment opportunity there, not only in the United States, but you talk about Europe. And, the issues they're having with Nord Stream 2, and now maybe even Nord Stream 1, where they're talking about decertifying that pipeline, which to me is insane. I think uranium is going to come out the winner in all of this, don't you think?
It's going to be a huge winner. It already is. And for all of the disappointment of the way, for example, that the Biden administration, especially in this country, is horribly handling our own needs for lithium, for nickel, for all of these different things by slowing down or killing one project after another. At the same time, they claim they want to have X number of cars, that are EVs by 2030. Not going to happen. At least where uranium and nuclear energy are concerned, everybody globally is singing from the same song sheet. As you pointed out, the technology is better. You've got small modular reactors. One of my big stories has been NuScale and the parent company that owns it, which has gotten funded from the government to create its small modular reactors. The technology is, but people that still squawk about how, quote, risky nuclear energy is, it's like you're driving around, a 1970s version Vega. When I worked in the gas station, the joke was, fill the oil and check the gas. These cars weren't always the best, and they'd rust apart quickly if you lived in the Northeast. And, if you saw somebody today in 2022, still somehow or other managing to get a Chevy Vega down the road, which is more air and rust than actual metal, to say, oh, cars are no good. Here's a 2022 Cadillac Escalade. Well, it's no good because that Vega is no good. So it's a different world. You got different technology, different everything. And again, happily, everybody seems to understand that. So you've already had a good move over the last year and a half or thereabouts for the uranium space. A lot of good companies have tripled or better in value. That's just the beginning of what we're going to see, I think, for some years to come. If we saw a big washout in the stock market, people would sell everything, at least for a while, and you might give some of that back. But there's hardly a sector to do with energy needs going forward that has got a better setup. Even when you've already tripled your money into space in the last 18 months or so on average, that's just the beginning.
Yeah, I agree with you. Any last thoughts, Chris?
Yeah, by the way, I want to say that, and hopefully you'll get to visit with him too on here before the show, but Scott Melby, who's been a friend of mine for years, he's the head of the Uranium Producers of America. There's a bill in Congress right now to start to reinvigorate finally our domestic industry after a lot of false starts. But he's going to be at the conference, and there's hardly a smarter guy on this planet that's active in the industry than Scott is. So anybody with an interest in that should come. And real quick on the registration too, Rob, hopefully people can come in person. We've got limited seating. Hopefully we don't get over that. It'd be a nice problem to have. But look, if you can't make it to the Chicagoland area for the weekend of May 6th and 7th, make sure you sign up at the appropriate place on a webpage anyway. You'll have access to our panel discussions that Rob and I will be on, and others. You'll have access to some of the other content and a lot of the themes that we've talked about here today. You'll have access to that as well.
Okay. Yeah, great. Any other last thoughts about the conference or just about the macro situation that you're seeing as we wrap up this one, Chris?
Yeah, I think it's just important to realize that and as confident as I sound right now about where things are going, we still don't have all of the answers yet. This is an evolving situation. This is why at a time like this, it's only accurate to a point to declare the kind of price increases we're having now to the 1970s and 80s. You've got elements added to this that did not exist in the 1970s and 80s, geopolitics and all the rest of this stuff for one. And again, I think the huge story is this move away from globalization, which, more and more the average investor out there hears a little bit about it. When you watch the news tonight, they talk about how the nickel market was shut down in London, how the LME now just said that palladium won't be accepted any longer from Russia. So you just had a spike in a palladium price again. There's a lot of weird stuff going on right now to the average person. And if you don't understand the backstory of this, you're going to be kind of flailing going forward. You're going to keep yourself at risk as the broad market gets hit because of a lot of these dynamics, and you're going to miss out on those emerging stories and sectors and companies that are still going to do well no matter what the broad market does. So I told my friends at Benzinga back in January, they asked me what my view was for the year. I said the NASDAQ is going to be down at least in bear market territory. They thought I was nuts. Well, the Fed won't let that happen. Well, they did. They're going to make more happen. I said, but at the same time, the NASDAQ goes down. There's going to be a lot of sectors that do well because there's still a lot of liquidity. You just got to be in the right ones. And that's the way things are turning out the first quarter plus of the year. That's what they're going to continue to do. So I guess the last parting thing I would say, like I have on my own website, Rob, is that there's conferences all over the place, real, in person, online. There's all kinds of information out there. But for this conference, I'll say the same thing confidently because I'm part of the planning that I'll say about my own publication, A National Investor. You can get information anywhere, but here you're going to get knowledge. And if you don't have the right knowledge to navigate this roadmap that is, coming together piece by piece in front of us, and we don't know what it's all going to be. But if you don't start with the right knowledge, you're going to be lost.
Yeah, I agree with you. To recap what you said, tons of changes coming in. If you don't understand those changes, if you've lived in this, post Bretton Woods world and grew up and your education, everything, I was recently in Miami talking with a lot of people around education, and we were talking about how education needs to change because it's such an industrial era model that needs to change for the, not only the way that we use technology today, but also to create more entrepreneurship, because we're moving into an era in which we can't just be a service-based economy and allow other people to produce our stuff with the power of the dollar. So we're going to have to innovate. Our education system is going to have to change. The way that we look at commodities is going to have to change. But the way that the markets are reacting and how you should view that from an investor perspective, but also as a consumer perspective, really needs to change. So excited to be at that conference talking about those things, Chris. And how can people, if they want you to help them navigate and provide information around that, how do they reach you at the National Investor?
Well, besides going to strategicinvestmentinsights.com to register, again, whether you can come in person or you want the information afterwards, make sure you do one or the other. We'd love to see you in person. But at my website, nationalinvestor.com, if you join my mailing list and click on join mailing list over there, Rob, what you will get if you sign up for my quote freebie mailing list is that issue you see right there that I put out late last year, the green issue and more. It's every part of these things that Rob and I have been talking about, some which we haven't had the time to cover. It's the longest and most meaty newsletter I ever put out. And in there, you will also receive profiles of a number of companies that I've already recommended in the National Investor that fit the themes going forward. And not just for green energy going forward, but, one of the sections of that, Rob, was entitled The Revenge of the Old Economy. And a lot of people a couple of years ago, when we actually went briefly negative on the spot oil price for a while, were saying that this is dead and buried, the energy industry will never come back. Well, it has. And we've got chronic shortages structurally built in going forward in a world where demand for energy and electricity goes up every year, recession or not. That doesn't change. The economy the population globally is growing and everything. So for a lot more meat of the kind of things we've talked about today, sign up for my mailing list. Doesn't cost you anything, and you'll get that sent to you.
Fantastic. Thank you, Chris, so much for joining us again on the program. I appreciate it.
You bet. I look forward to seeing you in a few weeks, buddy.